And this is talking about finance, and you know the routine by now. It's just what myself and my buddies, both on Wall Street and the City of London, what we've been talking about over the past week. We're going to start out by looking at the markets. And so let's look at the S&P 500. And instead of looking at performance like we've done past couple weeks, how about price to earnings ratios? Now, when we look at price to earnings, we're dividing the share price by earnings per share. And this helps us understand if a stock is cheap or expensive. Now, the long run average price to earnings ratio for the United States, for the US stock market, is roughly 16 to 17, depending upon the time frame. So we can see here, and this is why FinViz does a wonderful job. They color different stocks according to their price to earnings ratio. And basically, red means it's pretty expensive, and green means it's pretty cheap. You can see this market is expensive. There's not too much that's cheap over there. So it's it's a real pricey market. Again, not totally saying it's unwarranted. Some of these companies like Amazon and Microsoft, Apple, they've got relatively fast growth. But some other companies, not so sure about. It's interesting. Go over to FinViz and take a look at different time periods, and you'll get an idea why it looks like we're headed for either a sharp correction or perhaps an outright crash. I'm in the crash camp myself. We'll talk more about this, right? As you know, I've been diverting capital to tangible, real, physical assets because I think the stock market's going to crater, and it's going to be interesting to watch. But we're seeing lots of rosy forecasts. This bank suggests that SPX, S&P 500, I should say, will be at 6,000 by 2025. Well, it closed Friday at 44.37, so we're looking at an increase of roughly 35%. And they aren't the furthest out there. I've seen some other forecasts of 12,000 in the same time frame. My God. In both of them, in my view, are more than a little crazy. But I've been wrong before. It's happened. So who knows? But I do think about these things a fair amount, and I remember the dot-com bubble. Hopefully, you guys took a look at that before. And we talk about it all the time. And when we talk about extreme valuations, it sort of goes in one ear and out the other. People don't fully understand, but a picture's worth 1,000 words. My God! And check this out. And it brings to mind another old Wall Street expression that we had: gravity doesn't exist in the stock market until it does, and everyone's selling at the same time. So what's going to happen is when everyone's rushing to get out at the same time, there's no bids for stocks, and prices tend to drop like a rock. We've seen this many times before. Just in the dot-com bubble, we saw it. When this one happens, it's going to be epic. And to be honest with you guys, I can't really wait. I do have liquidity that I'd like to put to work, but we'll have to see what happens over time. Regardless, from time to time, I'm asked about stocks. And guys, I don't give out investment advice. I really don't. The only thing I tell you to do is to purchase only companies that pay dividends, to get any fantasy out of your head that you're going to trade. Swing trading, day trading, it's all garbage. It's rubbish. We've got the data from the tax people, and we know that 95% of traders, day traders, swing traders, fail to break even. It's there. Although there's lots of people that'll sell you a course in trading. Don't do it. Just buy some good cash flow generating, dividend paying stocks. Hold on to them, and you'll get rich slowly. It's the only way. Now, here's a beauty. And a lot of times, guys, people are really focused on these big tech companies, these sexy new companies. No. Johnson & Johnson, a really old American company. Look at this. Over the past 30 years, they've generated returns of roughly 3,800% over the same period of time. It's a dividend king. And a dividend king is a company, there's 57 of them, I believe. These are companies that consistently, every year, increase their dividend. They've increased their dividends every year for 59 years in a row. They were able to grow the business and at the same time give shareholders shareholders cash. Now, this is the kind of company, I don't own J&J, by the way. I just want to make it clear I don't have a conflict of interest here. I own other companies. But yeah, it's a beautiful company to own. The stock goes up. You get paid for holding it. And look at the S&P 500 over the same period of time, 2,400%. It's one of these stocks that just slow and steady is the way that they go. Oh yeah, and I got asked again about gold. Now, got a couple PMs, two of them actually, about gold. Now, first time I presented the chart, guys, I was at 58%. Go back and look. I'm now up to 67%. I've taken all the cash That's what the zero is up there. So I did have liquidity in my account. I've liquidated all the cash, and I'm sitting there now at 67%. Yeah, the Western democracies are just printing far too much money. And that's why we see inflation, asset prices. I mean, look at houses. It's all around us, guys. We know that there's too much money chasing these goods. And that's why we're seeing extreme valuations in property and other assets. Stocks come to mind. Like, look at the NASDAQ right there. So I'm very, very nervous about this. Now, as I've known from talking over the past few weeks, I've been buying more and more gold. And basically now I'm flat in terms of cash. Can't really do it. The only way I could acquire more gold, and this is in my retirement account in the States, it's an IRA. So I don't really have flexibility. I can't put more money in and things like that. But the only way I could buy more gold in this account would be to liquidate the stocks. And yeah, I ain't going to do that because I'm happy with the stocks I've got. And they all pay dividends. So why would I do that? I don't think I would. What I might do is, well, what I will do, I should say, as dividends get paid, I'll just buy more gold instead of going into cash. So you might want to look at holding some bullion if you don't already. Traditional financial planners suggest a 5% allocation, roughly 5 to about 10% maybe, of metals. Now, if you ever suspected I was crazy, you've got proof. Just don't get a conservatorship and lock me up with Brittany. Just be nice to me, guys. Because when the crash comes, I'm going to be buying this country up. I'm going to own it all because I've got a lot of gold here. And yeah, I do expect we're going to see gold in the fourth quarter rally. I'm not the only person with this view. Eventually, reality is going to catch up and people are going to realize that those pieces of paper, those shares, are just garbage compared to the value that you get from gold. And some people are very, very sharp with money. Indians, maximum respect, guys. Economic activity picking up in India, they're buying more gold. And check this out. Year on year, imports are up some 71%. And I'll tell you something. Here's a little known fact about India and gold. Although we all know that there's a cultural thing going on there. Well, I tend to view it not as culture. They're just very intelligent people when it comes to money. And we've lost the plot in the West. Homemakers in rural India hold over 11% of the planet's total amount of gold. Isn't that the wildest thing? Oh, guys, the things I learn when I hang out with my metal dealer in London. I go in there, well, before pandemic, I used to go in there once a month and chat and buy some small amounts of physical, just to pick his brain. Yeah, so it's really wonderful when you start to think about this, about what's going on. So definitely, you might want to get some gold. Hold on to it. The Indians are buying, and that makes it good enough for me. Dave Coker's buying too. So there you go. You got two good reasons to buy. And we do know that, and this is an interesting one that came out. We see that oil's got a big loss this week. It's really wild. So it turns out that the producers sort of increased output in anticipation of lockdown easing, but the Delta variant had other ideas. And we can actually tell this from the Apple mobility data. If you don't take a look at it, you might want to go on Apple, find it. Just Google it up and take a look. You can look at cities and countries and find out how much more mobile people are. Are they moving about more, staying home more? And it turns out, guys, that Americans just aren't moving about like they used to. So we'll have to watch this. If you've been annoyed by rising gas prices, I don't blame you. But maybe you'll get some reprieve there. Maybe. I'm not so sure about that. But in any case, we can always talk about Bitcoin. Yeah, and again, full disclosure, I do own Bitcoin. You know the story. I bought it every Friday night for many years. Stopped in 2019, December 2019, then started again in April 2021. Now, I can't remember the name of the analyst who published this research. Oh, guys, and no, it's not a senior moment. It's because I read an awful lot of research every week. So this is an interesting chart, and it does seem as though there's some seasonality to Bitcoin. Who knew? I don't trade. I didn't know. As you guys know, I just buy Bitcoin and hold on to it. I'm going to hoard it. Yeah. So I just buy Bitcoin and park it in my non-custodial wallet called a ledger. You should definitely get one as well instead of leaving it on the exchange. I just let it sit there. But I can tell you Bitcoin's performing well this weekend. Hey, wait. Alexa, what's the price of Bitcoin?
One Bitcoin is worth $44,060, up 1.3% over the last 24 hours.
Wow, I can sleep well tonight. I did buy Friday morning, so it's up since I bought. But in any case, guys, we'll have to see exactly what happens here. And this is a really good one. This one, we were talking about this, me and my buddies. Really what it comes down to is what do these guys know? because the Fed keeps talking about, and this was making the rounds in City of London last week. All the banks and brokerages were bouncing this back and forth, and this confirms something I said many times. Not only is inflation understated, it's much higher than reported, and this rubbish talk of transitory is meaningless. Sure, prices might level off, the acceleration, I should say, the increase in prices might level off, and I hope they do. But those prices won't be dropping anytime soon back down to pre-pandemic levels. So guys, you got to plan ahead. I keep a spreadsheet. I run a forecast of what the expenditure is going to be every month. At the end of the month, I take a look at it and I see where we were. And yeah, inflation in the UK closer to 12 for me. So it's not going down. My council tax went up 6.99%. They're not going to lower it. If you believe that, you've never lived in England, you don't know what a council's like. They do not lower taxes. They absolutely will not. It would have to be pretty draconian for them to do that. So you better plan ahead, guys. If you're uncomfortable now, my deepest sincere apologies. Just build a spreadsheet, track prices, try to change vendors, go talk to them, do whatever you can to get those prices lowered. But yeah, in any case, guys, this transitory stuff, the chairman of the ISM services disagrees. And we're going to have to see. All right, guys, that's it for this week. It's going to be a wonderful week. Futures are looking pretty darn rosy. Bitcoin, of course, is up. Gold is up. My gosh, what a time to be in the markets. You're going to make a bucket of money. Just look for the ops. Try to think outside the box, to use that beaten up expression. Don't do what everyone else is doing. I'm buying gold, and I'm not sure who else is buying gold, except for my Indian colleagues. They're buying gold, right? The nation of India, we can see. So yeah, try to do what other people aren't doing, and you'll be fine. Have a great week, guys. Take care.